Monday 28th of October. We have no news today, which means we have also the non-farm employment change at Friday and Thursday. So preferably I want to be done Wednesday at the AM session trading, and I don't trade these days. But I will be tape reading this and not be present on Friday. So today we because we have a Monday no morning no AM session, we prefer to trade in the pre-market conditions. Let me pick the points out. Yeah, I have to look into to the Notion template of mine, which is the journal entries of the pre-market session of 28th of October, which is really interesting. So today we had the SMTs, the three averages were very much out of sync. Here we didn't even fill that gap up. And then we have the Dow. Kind of bit. Yeah. Interesting. The Dow we see we trade higher after 8 a.m. So I was on the wrong side of the market today, mainly because of this, and because I tried to fight the what's it called, the bias. I wanted to see like these relative equal highs goes, but I should have kept my focus on the new week opening gap, because today we had, as you can see, we had a high resistance liquidity run day, which is we could short it in here. We are still in this you see, back and forth. So I expect for the election days, the FOMC days, to do the same thing in here, right? To crash the market before the election, and after the election, when Donald Trump is the new president, then we will preferably go up. This is that 4% of fair value gap, and here we find some points of resistance. The previous day fair value gap, when was that? That was on Monday. Yeah, that was previous week Monday. Monday's fair value gap. I want to keep those on the chart. And then of course we have current week opening gap, and then previous week opening gap, which is a very black hole of the Tron liquidity. We don't touch the low of that, but we do touch the consequent encouragement of that new week opening gap. So in here we have the 50-minute chart. We leave with momentum. So in here, this is 9 a.m. and in here we leave with momentum. So then we leave a fair value gap. We draw back up into that. We fill it up. We leave this portion open as a breakaway gap. This is then the breakaway gap, and then in here we form that. So for tomorrow and the rest of the week, I still want to see sell side going, and I'll be focusing on that unless we do some crazy things overnight and then take out sell side already. Then I want to see primary buy side, or maybe even I'm not sure how the price will develop. So in here we draw up into that, we turtle soup that at 10:30, we turtle soup it, and then we have an inverse fair value gap, and then we draw lower, and then we have high resistance liquidity run, And in high resistance liquidity runs, it's very likely that fair value gaps are getting reclaimed. It's the highest probability of fair value gaps getting traded back into that. So if you trade limit orders, don't be afraid that oh, conquer. If you trade limit orders, don't be afraid of waiting for your price to get back into that fair value gap, because you're most likely these days to trade back into that. So if you missed this, for instance, if you missed it here, you have 1, 2, 3 opportunities and price trades lower. You don't have to trade this inefficiency in here where my cursor is on. You can put your limit order here, maybe put it a little bit lower now this time, and then you have it on that. Same comes with this first percent of fair value gap. Normally when it trades in here and then it wants to go low and then it will take out new week opening gap, it doesn't do that. It trades backs into that, revisits this, reclaims, or I don't give a fuck, and then it trades lower and then finds support in here, resistance in here, and trades lower again. Yeah, nothing much of significant price points on the daily chart except for this, then the red line, which is 1, 2, 3 days ago, the opening price. Let me check. Yeah, it's the new week opening up. So that's it.